Vanguard and its funds are built differently. You might think by the title of this video that I'm just a biased fanboy mouthing off on YouTube about my favourite investment platform. After all, 90% of my investments do sit with Vanguard, just for transparency. But before you disregard me, let me prove to you why I believe that Vanguard is fundamentally different to all of the investment platforms out there, and why I believe its funds will outperform its competitors over the long run. It's worth saying that this video is not sponsored or affiliated with Vanguard in any way, but I'm not gonna lie, I do wish it was. Instead, this video is supported by my patrons, so a shout out to them. There are plenty of alternatives out there to Vanguard. You have Fidelity, Interactive Investor, Hargreaves Lansdown, IG, and that's even before you talk about the investment apps like Trading 212, eToro, or freetrade. But in this video, I'm going to cover my main points of what makes Vanguard so unique and why I believe your money might grow quicker with them as opposed to other platforms that are out there. So let's dive into it. The fundamental factor which makes Vanguard so different is its clear lack of conflict of interest as opposed to its competitors. Don't believe me? Well, just consider this. Most mutual fund companies and also investment apps are owned by shareholders or private owners. This means that the interest of the company is to generate profits for these owners above making profits for its investors. Hargreaves Lansdown can buy shares of them right now if you wish. Interactive Investor is owned by a private equity firm over in the US, and then Trading 212, eToro and freetrade are all also privately owned. And this is where Vanguard is different. The Vanguard Group is owned by its funds, and its funds are owned by the people who invest into these funds. That means if you own any slice of any Vanguard fund, then you are technically an owner of Vanguard. Pretty cool, eh? But why does this really matter? Well, the fundamental reason is that Vanguard only need to worry about covering their costs. They don't need to have the added burden of needing to generate a profit for its shareholders or its private owners. Don't you think it's a clear conflict of interest if you're asking a company to grow your money for you, but the very same company has to prioritise the profits of its owners above yours? It's a bit like having a bodyguard who's incentivised to do harm to you, or maybe a train company that's incentivised to get you to your destination as slow as possible. It's a complete conflict of interest. The beauty of the removal of this dilemma for Vanguard means that the only realistic way that they can reward their owners is by reducing cost for those owners in the business. They can do this as they only need to make enough money to cover the salaries of the individual who might be working for them and any other costs of running the platform itself, rather than their competitors who are working hard on making their owners wealthier. But this is just the theory of the models. Is there any truth behind it? Well, it helps by the fact that they have the lowest average cost across the entire industry. Some research indicates that their average fund on Vanguard costs as low as 0.11% versus an industry average of 0.62%. You might be mistaken in thinking that that doesn't sound like a massive difference, but when you actually look at the costs over time, it can be quite a big sum. But Vanguard actually go further than this. Another reason why they can offer low-cost funds is that they actually don't need to advertise that much or nearly as much as any other platform. I would bet a fair amount of money that the majority of you have either had an eToro or a freetrade advert on this very YouTube video. This doesn't mean that Vanguard don't advertise though, as I have recently seen them advertise both on TV and radio. We can only assume that this is a strategical decision by Vanguard to increase their customer base so they can actually benefit from larger economies of scale, making things cheaper for all its customers over time. But there is another reason why Vanguard don't have to advertise half as much as its competitors out in the market. You need to consider they've got such a great product which is such good value for money, it just tends to advertise itself. This video itself would be a perfect example of just that. If you weren't aware already, Vanguard started as the only company to offer very low cost index funds. However, due to their surge in popularity, there are now several funds who have entered this space, and it's actually started a little bit of a fee war between different platforms. Some platforms are legitimately trying to go toe-to-toe with Vanguard, but we are actually seeing more veiled attempts by others who are trying to advertise themselves as commission-free, making it seem like they're actually not making that much in fees, when they've actually got quite a few hidden fees behind the scene which they don't advertise half as much. After all, they really need to make those profits for their shareholders at the end of the day. But Vanguard are continuing to put on the pressure. Back in 2019, Vanguard's average ongoing charge figure was 0.34%, but 10 years later, it's as down as low as 0.2%, and they've been making further cuts ever since. For me, it's no surprise that Vanguard are now the second biggest asset management company in the world with 3.4 trillion in assets. This competitive advantage for Vanguard makes it almost impossible for any other company built differently to match the value that Vanguard really delivers. But don't just take my word for it. Vanguard have some very high profile advocates out in the market, But to keep this video brief, I just wanted to mention two that are well worth mentioning. The first is from an independent consumer group called Which. If you've never heard of Which before this video, then it's a company which independently reviews products and services to give consumers an informed decision before making their purchase. To make sure they remain impartial, they make their money by selling a subscription fee for their regular magazine. So what do Which have to say about Vanguard? Well, for the last 3 years running, Vanguard has gained the best overall score for an investment platform here in the UK. But I imagine it does just as well elsewhere around the world. The scores were collated by getting feedback from many sources, one being actual users of the platform to get their feedback and their experiences of using it, alongside detailed price analysis. But from this analysis, and also the responses from over 2,000 customers, Vanguard came first with a sizable margin, scoring 8% higher than the second placed AJ Bell. Vanguard were the only investment platform to score 5 out of 5 stars for value for money, which is really no surprise. But Which isn't the only source of good recommendation, and it might not wow you that much, but the next one might. It comes from one of the world's best investors, Warren Buffett, who's the 6th richest man in the world, with a net worth of around 110 billion, who's also the chairman and CEO of Berkshire Hathaway, who happens to be the 10th most valuable company in the world. Berkshire invests in companies like Apple and Coca-Cola, but they also own some businesses outright, including the insurance company Geico, the Duracell battery company, Dairy Queen, and also Fruit of the Loom. To understand Warren Buffett's support of Vanguard, I need to introduce you to Vanguard's founder, Jack Bogle, who sadly died in early 2019. After his death, Warren Buffett himself said that Jack had done more for American investors than anyone else before him. If this wasn't a big enough testimonial, then the next one certainly is. In Warren Buffett's will, he recommends Vanguard funds to his wife as the best way to invest any money that he leaves once he's gone. For me, in an age where we've been taught to be extremely distrusting of financial institutions from the 2008 crisis, where the rich bankers decided to turn the economy into a real-life casino game, this means there's one factor that I value above anything else, and that's trust. Even 13 years later, people are still extremely fearful about their financial futures, as they could collapse just like the Lehman Brothers did back over in the US in 2008. You might have noticed in other videos in the comment section, I do get asked a lot of the time why I choose Vanguard over others. And the answer I always give is trust. I can go to bed at night knowing that my money is being very well looked after, and the people who are looking after that money have their goals aligned with my very own, which is to grow my money as quick as possible while keeping their costs proportionally low. Could I really ask for much more than that? Anyway, that's just my point of view. If you enjoyed the video, then please quickly like this video. And if you like all things Vanguard, then I'll put some videos on the screen now. One is all about Vanguard's new app called Beacon, and the second is my latest portfolio update of my Vanguard account. Anyway, that's all for this video. See you in the next one.